one robotics stock that is about to break out, in my humble opinion. It is an automation stock. It's not Tesla. Tesla's already gone up within the past few days. There are other robotic stocks riding on the coattails of Tesla, so they're going up in sympathy. And I think the best one to buy is the one that has a multi-$100 million deal with Walmart to buy Walmart's robotics team and technology. I think it's partially an acqui-hire and definitely a technology play. Walmart Labs was a big deal and has been around for a while. I know Walmart doesn't sound technologically advanced. It really is. And this company is leading the warehouse automation category of robotics, which is a massive, massive space. So let's jump into the chart and take a look at what we're doing here. Got some motivation here to buy this given today's move, okay? Solid, but it also wasn't such a huge stick that it feels like this company's already gone. I mean, Tesla's already gone for sure. So this is the sympathy move on SYM, Symbiotic. And the volume is not anything unusual either. So volume tends to dry up before a big move to the upside. That's okay. That's actually good for us if the volume isn't great. This is the other company I wanted to compare it with. It did go RR today as well, okay? But this is also more a hospitality stock. It's a low price stock. It's under $5. SYM is where we want to have our attention. It's in that $50 range. It's has a great level to risk off of at about $48, which is not only in the past week, but also back in the middle of this year in July. And if we zoom way out, we can see we're going to get a pretty interesting level up here around 64, okay? 62, 63, 64. That's from about exactly 2 years ago, okay? So there aren't going to be bag holders up here for the most part. We can see that on the volume profile. There's not a lot of people owning stock from up here. And if they did, they would have still sold it. This actually includes folks from 2 years ago when in fact they would have likely sold it, okay? So really what we're looking at is something more like the initial chart I had up here, which is very little volume up here, which is great for us because once it gets up here, there's a ton of blue skies. Very clear risk level. One more level up here at 54 to take an eye at. Take a whack at. You know, if it hits that level and bounce off it, then we back off. Okay, maybe give it some time to digest. And I'm not saying you have to look at your portfolio every couple of days, every week even. I purposely pick stocks that I think are somewhat safe. So you can sort of walk away. That's why we do this. So we can live our lives or work and get money to put into these stocks in the first place. Now, what am I talking about with this Walmart agreement? Okay. Again, Tesla is the leader. That's why there's a ton of euphoria in the space. But this company, SYM, I think is super interesting as a business-to-business play because they did acquire Walmart's robotics unit, okay? Huge, huge deal. Again, not to be confused with the little company that has a lot of buzz right now, but serves cocktails, okay? I do think this one has a lot of room to the upside, but this one is safer, okay? Particularly today as I'm making this video and in the following days to the next week as you see this. This is the safer play right now because they have that Walmart connection. With that said, I don't know that automating warehouse operations is enough to buy it. I mean, because that could take years. We do want to look for any other new deals. If you see any other big brand names partnering or cutting deals with SYM, or SYM acquiring part of their units, that will be something to take a look at. I don't really know that they need more technology than Walmart's warehouse automation, which is the most advanced as far as I understand it. I'm not a grocer or mass market retail specialist, but I'm pretty sure Walmart Labs is very advanced. Now, with all of this sort of backdrop to excitement in Symbiotic, I just want to say that they did have a miss on earnings, okay? Even though they had a 40% revenue growth and a 26% increase year over year. I don't really look at these numbers exactly, 26% versus 10% versus whatever. Revenue went up, okay, profitability went up. They have a strong cash position. And with all of that, okay, and the revenue being $500 million, they did have a net loss still, okay, and the stock did pull back. We see this in the chart. I want to mention this because I think this is something we look at a lot. We see a lot of stocks failing on earnings, but I've said this again and again, but I'll say it again. A lot of stocks failed on Q2 earnings results. So this is normal. And to have a stock pull back and hold is actually a bullish signal. And the single reason to buy this is how clear this pivot level is. And the more there's compressed trading, investing, buy and sell activity at a level, the better it is for us to use that as a risk level, because it means a lot of people are agreeing that that number is really important as a price for the stock. So if it gets down there and starts to reject that level, we get out. We don't argue with the market. We flow with it, okay? If it gets down there and holds, maybe you hold your position and then you have a lot of blue skies up to the mid 60s, where that next level is around 64. Okay, so there's $15 or more of upside with a few dollars of risk. That's the kind of risk reward that makes a big percent growth in the accounts, no matter what your account size is. So if you like these stock ideas, if you want to talk about them, head over to stockscommunity.com. You can try it out for 7 days for $25. I'm in there. We can chat on a daily basis in there. If you like this video, you want to see more videos, hit that subscribe button, and I will see you in the next one.